Hello everyone, it's Wednesday, March 12th, and today we will take a closer look to the euro and the British pound charts to assess potential market movements. As you can see, both the euro and the pound extended gains yesterday, buoyed by a weaker dollar, which was largely driven by expectations of further interest rate cuts by the US Federal Reserve. In addition, the stock market is struggling, with equities suffering significant losses. This environment is contributing to downward pressure on the greenback, which is weakening against risky assets. The US economy appears to be on fragile ground, with numerous risks clouding its growth outlook. Eventually, these concerns could prompt the Fed to ease monetary policy, which is in line with President Donald Trump's preferred course of action. Yesterday's US economic data did little to move the market. Job openings and quits came in better than expected, but the Business Optimism Index, an important gauge of small business confidence, fell short of forecasts, providing little support for the dollar. This helped keep the market balanced without giving the greenback a boost. Now let's take a look at today's macroeconomic calendar. It is light on major news releases from the euro area, with the key event being a speech by ECB President Christine Lagarde. Notably, following the recent interest rate cut, Lagarde indicated that the central bank would adopt a cautious approach toward future monetary policy, which contributed to the euro's gains. If she reiterates her stance today, signaling that there is no pressing need for further rate cuts, the euro could extend its bullish momentum. On the other hand, more dovish comments could trigger a pullback, potentially leading to a bearish correction. Today, all eyes will be on US statistics. Consumer inflation is expected to show a 0.3% monthly increase and a 2.9% year-on-year rise in February, a slight decrease from January's figures. Core CPI is forecast to rise 0.3% month-on-month, down from 0.4% in January, with year-on-year core inflation expected to ease from 3.3% to 3.2%. If the data signals easing inflationary pressures, both the euro and the British pound are likely to gain further ground, weakening the dollar as the Fed would have fewer reasons to keep interest rates high. Conversely, if inflation surges, the Fed may have to hold rates steady, bolstering the dollar amid new trade tariffs from Donald Trump. From a technical perspective, the 1-hour EUR USD chart shows that a false breakout at 1.0889 could trigger a buy signal, with the price likely rising to 1.0945. If the price breaks through and consolidates above this level, the euro could extend gains to 1.0979, potentially reaching 1.1011. At this mark, I would recommend going short on the rebound, targeting an intraday correction of 25-30 pips. Short positions at 0979 and 0945 should only be considered following a false breakout. In the event of a dovish stance from Christine Lagarde, the euro could fall below 0889, offering an opportunity to sell the pair, with targets around 0838 and possibly 0807. At this level, it would be wise to go long on the rebound, anticipating a 25-30 pip move. Long positions at 1.0838 and 0889 should only be considered if a false breakout occurs. The situation with the British pound is quite similar. With a relatively light macroeconomic calendar, if buyers manage to take control of 29.17, a buy signal would be triggered, pushing sterling to 29.59. A break above this level would send the pound higher, likely surpassing the 1-month high of 1.3006 and potentially reaching 1.3040. At this level, traders are advised to go short on the rebound, targeting a 30-35 pip move. Short positions at 1.2959 and 1.3006 should only be considered after a false breakout. In a bear case scenario, if the price dips below 29.17, sterling could drop to 28.76 and probably 28.41. At this mark, I would recommend going long on the rebound, expecting a 30-35p move. Long positions at 1.2917 and 28.76 would only be relevant in case of a false breakout. Good luck to all.